Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Hope the audibility is fine. Let me display the PowerPoint presentation. Tracking the forex market together, part 1. On February 25th between 9 and 9:45 GMT. So we will track the market using a simple tool, namely the live market quote page. So let me give the link for the same. You can save it in a favorite of your Internet Explorer, and you can use it to track the market live using the live market quote page. Now I have fixed the camera over that of the live market quote page. You come across that euro is trading around 1.3802, 1.3804, 1.3798 is a low, 1.3837 is a high, 3 pips positive net change is seen. Earlier, the low in the case of euro was 1.3799 during that of the Asian session. As the initial low, they breached it by 1 pip. And in the case of GBP, 1.6124, 1.6128 are the current levels. 1.6115 is the new low. They earlier formed the initial low, 1.6122. 1.6160 is the high. 12 pips negative net change is seen. In the case of yen, 81.93 is the current level. 5 pips positive net change is seen. And CHF is trading around 92.66, 92.69, 92.30 is the low. 92.70 is the high, 4 pips positive net change is seen. Euro and CHF are showing positive net change, indicating that they are making the contrarian move. Similarly, Euro is showing positive net change and GBP is showing negative net change, which is a contrarian move. And similarly, Euro is showing positive net change and Yen is also showing positive net change. The nominal contrarian move is seen before the 9:30 GMT, the data released from that of UK. Then Canadian dollar is trading around 98.21, 98.25, 98.13 is the low, 98.30 is the high, 4 pips negative net change is seen. Australian dollar is showing 9 pip positive net change. It is trading below that of the psychological level 1.01 area. 1.0088 is the low. Now, only in the case of Euro and GBP, they made a brief downward stop. And in order to show you what is the initial low and the high, let me focus the camera over that of the initial low and the high, which are being recorded around 3:30 GMT. This is what we do on a daily basis during the Asian Session Live Market Analysis webinar. We try to note down around 3:30 GMT the initial lows and the highs on daily basis. And today's low is 1.3799. That's what I was telling you. They briefly cut it by 1 pip. And in the case of GBP, 61.22 was the low, and they breached it and formed 61.15, and currently trading around 61.22, 24.28. So there was a brief downward stop around that of 8:45 GMT, and subsequently they have just come above. And in the case of CHF, they are not breached the low, but they have breached the high. 92.63 was the low, and a high that has been breached. They formed a new high, 92.70. So they have been making a very big downward move in the case of CHF and showed the new psychological level 92 area, and subsequently they have started gaining the level. And also, in order to facilitate rise of the Euro CHF, they are showing positive net change in the case of Euro as well as positive net change in the case of USD CHF, a typical contrarian move. And in the case of yen, 81.83 was the initial low, and they formed 81.81 as the new low and come above that, a brief downward stop, and 82.05 is the high that has not been breached. So they are making slow consolidation, and they are expected to gain the levels during the day. And Australian dollar 1.0088 is the low, and they have come closer to that, and still for 30 minutes they are not breached it. So similar to that of what they have done in the case of GBP, they just breached the low and then went above that of the initial low and then came down up to that of the low and then went up. And again they are just coming below that of 61.22 in the case of GBP. This is how they just make the moves here in order to handle the crosses when the volume is thin and when the traders are waiting for the data release. So during this time, they nicely do the stop-ins and try to accumulate the stops from there. So at the lower level, the sell stops are triggered and they try to buy it from that of the lowest level sellers. Then Canadian dollar 98.16 was the initial low and they formed a new low 98.30. 98.30 is the high, currently trading around 98.24, above that of the initial low. So in all you come across, very briefly, they had done the down stop, and even though during that of the early European session, a quick downward move and followed by that a dip and the rise of the expected moves, and that I had displayed it in the blog, the dip was not very severe. So that indicates that they considerably trapped the short sellers also, and they are not willing to give the profit for them, and they will be able to try to make use of the short sellers positions to come for short covering during the day. So let me focus the camera over that of the PowerPoint presentation. So we have seen the initial low and the high, and also in the live market put page. So what we are supposed to do with regard to these understandings, how to track the market. So we will try to track the forex market using the live market put page, and there we make a note of the initial lows and the highs, and subsequently what you have to do is you have to also follow the timings. Both the levels and the timings are very important with regard to the understanding of the market moves. So those who are newcomers probably make a note. These are all the timings followed by that of the players. So it is not that conventionally used, and these are all the timings followed by that of the players. So the session 1 or a Japanese session is from 0030 to 7:30 GMT. 7:30 to 8 GMT is a gap time. So actually during those gap times, the bank orders are not flowing into that of the market. The bank orders in the sense with regard to currency conversion. So when such orders are not coming for currency conversions, then the players make use of such time to make false moves or the stop-ins in the market. And this is depending upon the geographical positions of the various countries. So the banks in one country get closed and the banks in another country open by local 9:30 a.m. and there is a gap of 30 minutes. And that particular gap, no big order from that of the bank with regard to currency conversion will be coming. The trading desk will be available, but the currency conversions will not happen, and that is being made use of by that of the players in order to make the stop. And European session starts by 8 GMT up to 14 GMT. You come across the European session. 14 to 14:30 is the gap time again before the start of the US session. 14:30 to 21:30 is the US session. 21:30 to 0030 is the gap time again, 4 hours of gap time before the next day starts. So in the live market put page, you come across the bid ask and the low and the high, and also the next column, net. So that net change indicates that what is the current level of a particular currency in relation to that of yesterday US session close by 21:30 GMT. So the last 30 minutes of trade is being taken into consideration by the interbank treasury, and they try to set the 0030 GMT, the highs and the lows, and subsequently by 3:30 GMT, the players set the initial lows and the highs for their reference, and the net changes indicate the limitations with regard to the bank's transactions. They can rise or drop euro by about 150 pips in a given day. They cannot make unlimited rise or unlimited drop. Similarly, GBP about 250 pips. So those details I have given it in the My Trading System webinar, and they are being recorded and displayed in the next read. You can listen to that and understand if you are not familiar with that. Now, with regard to the factors to be considered for trading, so I'm going to give you how exactly we can take trading decisions. So we have to use GMT time to track the market, and also note down the session gap time, the session start time, mid session, and the late session. The gap time I have shown it in the previous slide, and session starts, say for example 8 GMT, the European session starts. Then 1.5 hours from that start up to 9:30 GMT is early session. Then the last 1.5 hours will be the late session, and the mid session will be in between those two. And during mid sessions they will handle the crosses. During session start and session close time they will handle the majors in a big way. So if you want to take positions during start of the session or during early session or the late session, you can try to focus on Euro and GBP or any of the majors, PN and CHF. And in case if you want to do the trades with regard to the crosses like Euro GBP, Euro CHF, GBP CHF, etc., focus them during that of the mid session. Then watch the live market quote page, the link I already given it, and relate to the current market level with regard to the highs and the lows and also the net change. That's what I have shown it. So now Euro is trading near that of the low. GBP has just made again a false move up to that of 61.15, and there is going to be a GBP data release by 9:30 GMT. Before that they are just hovering around there up and down about 10 to 15 pips, and they are expected to gain the levels in the case of GBP. Afterwards we will see how exactly we can read it, because they made quick downward moves and a false move followed by that up to that of 61.15, and then they come above that of the initial low, and that indicates that they are not willing to drop in a big way, even though the forecast expects a quick dip and then a rise. There were only brief downward stoppings in the case of Euro and GBP. So in Euro also it has come above that of the psychological level 1.38 now. Then identify the currency in which you find a spread of 40 to 50 pips. That is very important in order to take a position. So Euro, for example, which is making about 40 pips, and in the case of GBP is around that of 45 pips, and in the case of Australian dollar you come across around 46 pips. So these are all the currencies you find some spread has happened. Then in the case of CHF it is 43, and in the case of yen it is hardly about 20 pips, and Canadian dollar is also hardly around 20-25 pips. So avoid those currencies which has less spread, because there if you try to take a position you can maximum get about 20-25 pips. And so simply taking a position and holding it for aiming about 10 to 15 pips is no good like a scalp trade. Instead, when you take position, you should be able to give you the maximum profit for the day. And that is very important. So no sentimental attachment to any currency pair. We try to identify a currency which has got a good spread between the low and the high, and that currency if you try to take, and there will be a good swing, and you will be able to earn about 40 pips or sometimes 75 pips. If the going is good, you can earn even up to about 150 pips in a given day. So that is why we identify the currencies, and we try to take a position closer to that of the low and a buy position, and take a sell position closer to that of the high if the market stays near that of the high and not breach the high. So in the case of Euro and GBP, now they just breached the low and as a brief downward stop, because before the data release, even though they have done it after 8:30 GMT, they made it very briefly as a stop end, and because nobody can control them doing stop end, whenever they find they can do the stop end, and no hard and fast rule pertaining to that stop ends. And what they had done it before the data release. So before the data release, if they had done the downward stop, and that indicates that they want to rise afterwards. That is how we read, because they always make a cunning move to start with, and then their intentional move. The cunning move happens to be a downward move. So the false move happens to be a downward move. So when they hit the stops and prepare themselves and buy all the stops, that means after accumulating the buy positions, they want to gain the levels after the data release. They may make a brief volatile moves during that time in order to confuse the traders or induce some traders to take sell positions based on the fundamental, and then subsequently they will rise. So this is how the intention can be really read from their market action or the price action, what we see in the market, rather than going to that of the in-depth analysis of the data which is going to be released from time to time. And you know that the data release might be a fundamental data, and it doesn't mean that it is going to have a perennial sentiment in the market, and it will have the same impact or the sentiment remaining in the market till the next data comes. Then once the next data comes, the earlier data will get discounted and the new data will be in focus, and accordingly they make the moves. So when it is a European data or UK data, they may just react to that. In the case of Euro and GBP, if it is negative, they may make a dip, and if it is positive, they make a rise, or sometimes they simply say that it is discounted, because afterwards the market is waiting for a bigger data from that of US, like the GDP data around 13:30 GMT, so they may not make any big move and wait for the US data. And if the US data is negative, they straight away rise Euro and GBP, even though you come across the European data was weak. This is how the market functions, so we need to understand that. And simply they discount about it. If you ask about that of the earlier data with regard to any analyst who is following fundamentals and things like that, they will simply say that that is discounted, nothing more than that. Then how to take it entry decisions. Now we are in a situation wherein before the data release, 9:30 data release from that of UK, we are trying to take a buy position or a sell position, whatever it is. When the market is near the low and not reached the low, we will try to take a buy position. So, and the forecast also says that there will be an extended rise. The forecast, we use it as a guiding factor and not strictly follow it, because it will not be able to give the levels straight away. It will only give the trend, intraday trends for the day, and we have to estimate it by market reading using the high and the low, and also what type of moves they are doing, either a stop and or a false move or an extended move or an intentional move. So based on those four type of moves, we will try to take the positions. Now you find that they just made a brief downward stop and afterwards holding the market above that of the initial low in the case of Euro and GBP. So we will try to initiate a buy position. Then exit. How exactly? We will exit out of the position. Similar to that of the low, when you are taken a buy position near the low, we will wait for them to go near the high. And after reaching closer to high, if they breach the high in less than 30 minutes, then okay, we will try to take a chance and wait for another 30 minutes whether they come below that of the initial high or they straight away go up. If they come below that of the initial high, then we understand they are done here, stop and on the upside, we will try to exit it. And in case if they go above that of the initial high and stay above that of the initial high for more than 30 minutes, then understand they will make a follow-up move of an extended rise for 2 hours. So we wait for 2 hours and try to exit out of the position. So these are all based on the timings, not the levels. Based on the timings, once about 1.5 hours is over, then we wait for another 30 minutes. They don't breach the new high formed in that 30 minutes, last 30 minutes time frame, we just exit out of the position. In case if they make a brief upward stop and then come below that of the initial high and stay below, then we simply exit it with a minimal profit, because we understand they have done a stop and they will give one more swing on the downside. At that time we will re-enter in the market, again a buy and sell trade, or if you are smart enough you can do a sell and buy trade as well. So this is how, based on the moves what they are doing and based on the timings what they are following, we try to take a trading decisions, and these entry and the exit decisions are given equal importance. We don't become greedy or we don't become panic while taking the entry and while exiting out of the positions. And also we don't take unlimited risk and we simply keep a stop. And in case if some traders are not willing to keep stop, then I have given in many of my webinars that once a position makes profit, at least keep stop at entry so that you don't lose. Because many of the traders have got the feel or an experience that when they keep the stop, they hit the stops and go up. If they got a buy position or if they got a sell position, they hit the stops and come down. So invariably they become frustrated and avoid keeping stop. Sometimes they keep a stop about 70 pips, 80 pips. There again they hit it and go in expectation of their direction. So invariably they develop the feel of keeping the open position without a stop. and it will be dangerous and it can risk your equity in an unlimited way, but still many take a chance. But the only way to handle such a situation is take very, very less positions, so that when you take only one position at a time, and it can be about 1 or 2% of your equity. So in case if they make a massive move against, you can think of an averaging and try to exit out of the position without a stop. And in such a scenario, you try to take position as a mini loss. Then it will be very, very safe for you to handle the situation without a stop. Blindly taking too many positions and without a stop is not greatness, it is foolishness. Then entry and exit can be fine-tuned by keeping limit orders rather than try directly taking the positions from that of the market. Then always control your emotions. Avoid impulsive buying, that is, after the rise don't buy and after the drop don't sell. So these are all the fundamental rules by which we try to decide upon our tradings. And in case if the market has breached the low or the high or below the high, what we try to do? So we identify whether it is a stop and they just go above and come down in less than 30 minutes. A false move, they come up to that low and go up, or up to that high and come down. Then it is false move. Extended move, they go above that high and stay there for 2 hours and afterwards make another move. Then on the similarly downside, they come down and stay, form a new low and just stop cutting the new low after about 130 hours. Then later on the last 30 minutes they don't cut the low, then you know that the extended move is over and they could reverse. Then intentional move, they continue to cut the low. If their market, they are trying to drop it or continue to cut the high every 30 minutes, and no new low or the new high will be kept for more than 30 minutes. And in such a situation, every 20-25 minutes they will cut the low and try to go down. But they do it only for about 2 sessions. Suppose if they started making a drop, that of Japanese to European, then US session they make a initial dip and then subsequently rise. Similarly, if they continue to rise during Japanese and European session, and US session they make one more rise and then make this drop. So that is how the intentional move is being done. So we read those type of moves and try to take positions accordingly. So if you understand the moves, then we don't become upright. If you give too much importance to the levels, there comes the difficulty. Say for example, I told you that you can buy euro near that of the low and GBP near that of the low, but it has made a small gain. Doesn't matter, but we can fine tune and try to take a position there near that of the data release time. So no hard difficulty. But the thing is, when you are keeping a limit order there, we have to necessarily see that we fine tune our order by keeping a limit order about 5 to 10 pips below that of the market, so that we will be able to get a fine tuned fill so that we are not stopped out so easily. Then in case if they cut the high and the low, then we wait for 2 hours. Afterwards try to take the positions, or wait for 2 sessions and then try to take the positions. Simply we just avoid taking any further positions. Otherwise we go in line with that of the intentional move and try to do some swing trades if we are smart enough. Now with regard to the forecast, Euro and GBP are expected to make volatile moves, and around the data release they could make a volatile move, and then subsequently they are expected to quickly rise during that of the European session. So this forecast we will review during US session, and also I will try to take positions now and review that how exactly the going is. And I will come back by 15 GMT and explain to you how exactly these positions have performed during this particular live trade decision making process. So Euro is currently trading around 1.3805, 1.3796 was the low. So just it is about 10 pips higher. So we will keep a buy order. A buy limit 1.37, just about 5 pips above that of the new low. So it will be around 1.5801. so that we'll get a definite fill, but we are not taking a chance. We keep an entry stop if that entry stop facility is available or a hedging order is available. Otherwise, we can keep a stop 30 pips below. So the limit order is placed. It is not direct market position. We are just keeping an order and see whether the order gets filled or not. Then we keep a stop below that. In case if they make a massive drop, we will be stopped out. We will limit the risk only to 30 pips because the market, anything can happen at any given time. There are so many factors which can influence the market, either a sudden breakout news or a speech or any data release and things like that. There are so many ifs and buts in the market. So don't think that, okay, 9:30 is the data release time. Before that, nothing is going to happen in the market. Don't think like that. They can simply create a rumor also and make a massive stop on the downside in the market. Keep that in mind. So market can bring in volatile mood at any given time. So there is no guarantee that if I envisage euro has to go up, there is no guarantee that euro can go up or euro has to go up, because we try to use various type of techniques and try to estimate based on that, either using technicals or fundamentals or a combination of these two or any other parameters. We try to use it in order to determine, and there can be an element of error in it. No, a forecast is a forecast. It has got its own limitation. An element of error is always there in a forecast. So don't think that it is 100% perfect. So I won't be knowing whether in next 30 minutes I will be living or not. That is the situation we face in the world. And where is the question of forecasting that market? We can only estimate. We can only estimate the market, and we can only find that there could be a possibility of rise and a drop based on various parameters. So you have to understand as a trader that the analysts do the forecast. If the going is good, don't immediately think that it is 100% perfect. So always the element of error can come into that of the analysis. And that is the limitations of any type of analysis for that matter. Similarly, in the case of GBP, so 1.6115 is the low and the earlier low was 1.6122. So we will keep around that a buy limit order and a stop of 30 pips. Then in the case of CHF, and it is near that of the high, they breached the high 0.9266. They have breached the high and they are staying around 9276, and it's showing positive net change along with that of euro. So, and also there is a CHF data release at the time, and we will keep a buy limit order because they are trying to do a contrarian move. I am not taking a buy position in euro and try to take a sell position in CHF. I am trying to take both euro as well as CHF, a buy position. Hope you are able to understand. By looking into that of the net change, we can understand whether they are doing a USD weakening move or a USD strengthening move or a contrarian move. That is, contrarian means some pairs are making USD gaining move, certain other pairs are doing USD weakening move. That sort of situation is referred as a contrarian move. So in the case of USD CHF, they breached the high and they are staying above that. So just above that of the initial high, sorry, 92.66. So 92.67, I am just keeping 10 pips below that of the market, a buy limit order with a stop of 30 pips. Then yen we are not taking because the spread is less. Then Australian dollar, it has come closer to the low, gone up already. It was trading below that of the initial, closer to that of the initial low. Anyhow, we will try to keep a buy limit order. If they fill it, okay, fine. Otherwise, we don't regret for that. We don't become impulsive and try to buy during the rise. We'll keep a limit order 1.0090 with a stop of 30. Okay, so 1.0088 is the low, and they came down a little bit. So we'll just keep 2 pips above that of the initial low, a buy limit order, and it's also about 10 to 12 pips below that of the initial market level. Now it has gone up to 1.0105. So probably I have to improve it to 95. Otherwise, just 10 pips below that of the market, so that we could be able to get a definite fill. And in the case of Canadian dollar, they are showing negative net change, and the spread is just 15-20 pips, so we are not looking into that. And in the case of the yen crosses and also the other crosses, see that they are definitely making a spread of 50 pips between the high and the low before entering into the other market. GBP yen, Euro yen, let us review. GBP yen, Euro yen 112.94, 113.44 are the lows and the highs, just around 49 pips, 50 pips. Then in the case of GBP yen, 131.93 and 132.45. Then again you come across around 45 pips. So we will not touch that. And Euro GBP, 95.50, 95.77. Narrow range consolidations are happening. And Euro GBP, they are gained about 15 pips positive net change. And they are gone above that of 0.985. And also 8550, they are just gone short of 0.86. So they are expected to drop. For that, they have to necessarily hold Euro and rise GBP. At the moment, we are not coming across that. So our GBP position is filled. Now we have got a buy position. Hope you are able to understand that market came down 111. 1.6111, 1.6115 are the current levels. We kept 1.6122 that got filled, and Euro is not yet been filled. So Euro CHF also, we don't find much of a move there. So okay, we will only focus only on these four positions. Now we have got a GBP position filled, and we don't have the Euro filled yet, and also other orders. And in case if the spread increases, we can try to take further positions also. Let me explain how exactly these positions are being handled. So once I have taken a position, so 30 pips below, and that will be, so 1.6082 will be the stop. So below the psychological level, 1.6100, anyhow they will try to hit it. In case if they hit my stop and that stop hit level is not making profit for 30 minutes of observation, I will re-enter in the market. In case the stop hit level makes profit, they come to 1.6092 and then came to 1.6072 and 65 and things like that, then I will not take any buy position, because I find they wanted to make an extended drop. In case if that 1.6092 is filled and subsequently for 30 minutes that particular level is not breached or the market has not gone below, I'll just re-enter so that my stop will be closed with a nominal 4-5 pips loss. Then I will try to close it above 61.22 in order to have a net profit. In the absence of hedging, so we have to read the market carefully, and without any bias or a fear, we should be able to handle it carefully. It is not that I wanted to do only buy and sell trade or only sell and buy trade, and no such bias. And we wanted to go along with that of the market and try to capture some profit. All the profit of the market we will not be able to get it, but at least wherever possible, we will try to earn money. That is the that should be the objective, because with a limited equity, we will not be able to buy the entire market. It is very, very simple to understand. So when you are taking a position, when you just try to maximize the profit, holding when it is making loss, it is something like with a few $100 you wanted to buy the entire market. It is next to impossible. So always the traders have got a tendency to hold the loss making position for a long time and quickly book profit of 10-15 pips when the position makes profit. And also there are certain other traders, after taking a buy position, if the market has dropped, they simply keep stop at entry. When the market goes up, they simply close it out. And if they ask themselves, okay, the market has come up to this particular level, and where is the necessity to close it? So this sort of unbiased understanding of the market is very important. If it has come up to this level, there is a great chance it can go up also. So we have to use our strategies to handle the situations rather than simply following the levels. And if you think euro at 1.38, it might look bullish, and 1.35 it would have looked bearish. But what we need to understand the long-term trend of the market, and also in line with that of the trend we can do the trades. We can also do swing trades in between, but we have to be very, very careful. First of all, once a position makes profit, keep stop at entry, and afterwards, once the position is in a position, once a position makes a profit of 30-45 pips, you make it as a trailing stop, so that either 15 pips or 20 pips, 25 pips, depending upon the convenience you find, depending upon the nature of the platform, then you will be able to understand really that we will be able to get either a minimal profit or an exit near that of the high, so that a maximum profit. In case if they breach the high, you can move the limit order to exit, can be moved away from the market, so that the trailing stop can continue. That way you can maximize the profit, not out of greed. So if you become greedy, then you will say, okay, after 500 pips rise, I'll close it, but it would have gone up to 400 pips and dropped, you would have missed that opportunity. Use the trailing stop, and in case if you want to do position trade, use at least 75 pips trailing stop in a profit making position, so that if they drop 75 pips, they will give you a better entry level. And definitely if you have got a hedging facility, if the trailing hedging order is there, if it is hedged, definitely you will see profit in the hedging. So that way we have to understand the market and try to trade. Now you find in the case of GBP, they breached the low. The data might be out, and they just made a small dip in the case of GBP. A little bit of volatile move, so it is not a deep drop at the moment. So let us see, anyhow we have got a stop to limit. In case if you are stopped out, then I will review the market again, and if the market is not coming down below 90, 60, 92 and further down, then I will try to re-enter and show it to you how exactly I handle the positions. So I kept 4 orders. It doesn't mean you have to simultaneously trade in 4 currencies. In order to show you how exactly the decisions can be taken depending upon the market conditions. Otherwise, I normally take only one position at a time and try to close it with a profit, then only think of another position, whatever be the great opportunities there. Because my equity is limited, I can only take limited positions in the market, and I cannot grab all the profit which is available in the market. It is next to impossible even to that of the players. They have to give the profit to that of the traders wherever possible. So let me minimize the PowerPoint presentation and focus the camera over that of the live market code page and take up the questions which are asked here. Then Clinton, at the moment the Euro early session is about 1 hour ongoing. You mentioned that many times you enter and exit a trade in one session. Yes, obviously when I try to take a position during European session, I try to exit in the position because they can simply bring in intraday trend reversal in the next sessions. So that when the trend is there, up to the end of the session is good. Afterwards, they can make a false move during gap time, and also they can reverse it during the next session. Unless and otherwise you have that forecast, it might be difficult for us to follow it simply using the market trading. So best way to is grab the profit and look into the market again and try to think of another trade. So Euro seems European session and US session. In the mid-session, majors are not handled. So traders are now for the Euro late session. No, now it is the early session. Up to 9:30 GMT is the early session. Afterwards, you come across the mid-session. Then a little bit of move they will make and then handle the cross by making contrarian move. Before the data release also, they will try to make contrarian move in the absence of good volume. So you have to understand, whenever there is a lack of volume or reduced volume in the market, immediately they try to handle the crosses. Is there any problem? Hope you are able to hear me. Okay. Okay. So that we have to follow it and try to do the trades accordingly. Then Shuklag, why you always say that take position at the start of the session, as they always make false move at the session start? Yeah, they make a false move during the session start, a dip and then followed by that a rise, or a quick upward stop and followed by that a drop. So during such false move, you try to take a position so that you will be in line with that of their intentional move. That is a simple reason. Because see, it is something like a person who is trying to cheat you. So when you walk along that subway, somebody might come closer to you and you will say that there is some stain in your shirt. And as if he is so generous and he is coming out to help you out, he will just show it. And once your attention is diverted, he takes away your purse. So always they try to give as if, present themselves as if they are for us. And they are willing to extend all the cooperation and the help. And subsequently, we understand it is nothing but a diversion of our mind or attention, and then they take our belonging. It is a very similar way. They make a false move before, as if the market is going to drop. Immediately, if you think that, okay, it is going to drop and sell, you will find you will be at the lowest level seller. And probably in Sam's wordings, it will be the demand level in which you will be selling it, but actually they create an artificial supply at that time. So when they make a dip by circular trade, it will become an artificial supply, and then you try to sell, you get trapped. Then Clenderman, does it matter that there is a contrarian move now? Yeah, but early session, if they have to certainly handle, they have to handle the majors and also the commodity pairs in order to bring in actions in the case of the crosses. See, like gaining the levels in the case of Euro, holding GBP, they will gain level in the case of Euro GBP, and also holding GBP and gaining the levels in the case of CHF. They will be able to gain the levels in the case of GBP CHF. So that's how, by handling two currencies, they will be able to bring in action, nearly about 3 to 4 crosses. So that is how they do it, and that is the very purpose of doing the contrarian moves in the market, which may not have any fundamental relevance. If it is a US data release, everybody will think that USD has to become weakened against all currencies. But they will simply make a contrarian move and fool everybody. That is what they try to do day in and day out. Then M-try, Euro CHF spread is 70 pips. Yeah, Euro CHF spread was 70 pips. Sorry, I do not want to take too many positions, and because the time is getting shorter, that's why I just left it. Don't think otherwise. Then Shukla, like you developed a strategy for majors denominator, commodity currency index, how you handle the commodities and crosses as they are. Probably I'll take another webinar and explain how to handle the crosses, how to trade in crosses. Probably I'll do that because many people are more interested in crosses, but they are very volatile. We have to understand that. And if you are willing to accept such risk, then I am willing to take another webinar, probably how to trade in crosses, probably European crosses and Japanese crosses separately. Can you show that the session time? Yeah, I will go that. I'll do that. Okay. You enter positions after first 30 minutes in your early European session and 30 minutes after US session. Yeah, because the webinar starts by 9 GMT, so after 1 hour I have to take 1 or 1.5 hours, I have to take that. But US session, it will be exactly 15 GMT. I'll try to take it around that particular time, the position for US session. Is it correct that the most of the time London move in the opposite direction of the Frankfurt? Not necessarily. That is what you think. It is Frankfurt move and the London move. It is actually a gap time. And they try to make use of such gap times. And then you call it as a false move or opposite move. But actually they make a dip during that. And afterwards they try to make their intentional move. Because see, your timing is based on the convention or based on the conventional understanding of the market. But what the players use is very important. Suppose if the players are using their code word, and if you don't know the code word, then you will not be able to understand what they are communicating among themselves. Isn't it? So that is very important. Mike, can you please repeat what the net column? Yeah. Net here you come across. Now in the case of euro is 23 pips. It's in green, that means positive net. That means yesterday euro closed around 1.3799. So from there 23 pips above, currently it is trading. That is what it refers to. So always from that of the yesterday US session close, the net change start working, and it will show maximum 150 pips on the upside or 150 pips on the downside. Afterwards the players will reverse it. There is a limitations pertaining to that. And if you listen to my trading system webinar, there I explain what are the limitations given for each and every currency. Okay. Okay, Arun, I am expecting GBP to go to 1.65. Okay, you are envisaging it will go to 1.65. Fine. But current position, you try to handle it properly. Okay, yes, webinar on crosses. Yeah, sure, I'll do that. Yeah, now, what if the order is not filled? I explained that I'll wait for about 30 minutes, and if the order is not filled, then I'll try to modify and try to take the order. I try to convert into a position, the order. See, now for example, GBP, I taken a buy position, which is making a slight loss, and they are just come to my close stop level. So in that condition, I will not try to take a buy position in the case of euro, because in order to create the sentiment, they will try to make a dip here, and then try to, now my stop is being filled in the case of GBP, and see whether it is going below that of 90, 60, 92 for about 10-30 minutes. Otherwise, I'll re-enter into the market. Hope you are able to understand. Then Matthew. GBP, they are making downward move only for past 2 days. Yes, they have been doing a range bound swings between 61 to 62. And making a brief downward stop and an upward stop on above 62 level. And they are doing this sort of consolidation mainly to gain the levels in the case of Euro GBP, because the pip value is high there, and subsequently they are expected to make a massive rise in the case of GBP. And many people will think that no, it is no good to hold a buy position in the case of GBP because it is making range bound swing, and they exit out of that. Later on they make one big go and show all the profit, but at the time the trader would have lost the patience and left the currency. This is what invariably happens. So many traders sometimes, they take buy position in the CHF and it's not making profit. Simply they close it. Then afterwards they forget about it and go to another currency. Then they will make a big move in the case of CHF. So it is a question of testing the patience of the traders. The players know very well when the traders' patience are tested, they just cut the positions with the loss. Then, why do you always say that the gap GDP will rise more than euro? That's what they have to do it invariably, irrespective of the fundamental. So, see, there is no yardstick to measure the fundamentals of various currencies. They are all relative grading, and they are not in absolute comparable levels, because the economic conditions in various countries are being assessed in using various type of parameters. There is no single yardstick to measure all the economic conditions. And understand that. That is why you come across in the world the developed countries, developing countries, underdeveloped countries, and they try to use different parameters to measure it as much as possible. But there is no clear-cut quantitative measure to compare all the economic fundamentals. Even though you think in terms of percentage is comparable, it is not so. Please understand that. There is a statistical limitations with regard to that. Then fundamental news. of GBP are more negative. There are so many occasions we have seen GBP was trading higher when compared to that of Euro. And if you think that the fundamental news of GBP is weak when compared to Euro perennially, then I can only say that the sentiments are short-lived. And when a next data, US data is released and US data is very weak, then GBP can simply rise it. So we'll be able to say that whether US data weakness is more stronger when compared to that of GBP weakness. How do you measure it? And during different days, you come across different type of data released. They are not at all comparable. So if it is a GDP in US and GDP in UK, probably you can just make a relative comparison. But if it is some other data, how do you compare it? See, these are all nothing but the sentiments created, nothing more than that. They simply create the sentiments, and the sentiments are short-lived in the market. Then Euro faced more problem because of the Eurozone. Which country you tell me is not having problem? Every country has got their own economic problems, and there are certain hidden problems which are not being disclosed, and certain other problems which are being disclosed. Say, for example, the trade deficit. There are various type of analysis to interpret on that of the trade deficit. And when the country is not bothered about the trade deficit, the analysts bother about the trade deficit and try to give certain type of interpretation. In their own way, they are correct. But it doesn't mean the market has to take it fully and try to make moves accordingly. When US data is weak, UK data is weak, what sort of move you want GBP to do, you tell me, or Euro to do? So you have to understand that market volatility does not fully depend upon the fundamentals. So whenever it is not on fundamentals and you simply say that it is oversold condition, so it has gone up, then we say it is technical. As a lay trader, you won't be knowing which one is going to grip the market, either the fundamental or the technicals. Whether the next move is going to be based on fundamental or technical. That is what you need to understand. So let us just see the data, what has been released. So I'm not in a hurry to refer to that of the data, but based on the market reaction, I look into that of the data. So you can GBP, Euro was negative, and Euro was negative, 9, the pay is for 9, okay, is negative, minus 0.6. So as of 5, the expectations was the same and a little bit down. Okay, now let us come to that other market. For this negative net change, what sort of move it has done? They hit my stop at 60.92 and formed a new low 60.88, and afterwards they are not cut it. That is the only reaction, just about 5-6 pips they made the reaction in the market, and it has not made further drop. So what I am supposed to do? So I'll go back to my PowerPoint presentation. So I will reinstate the position. I am very sure that they want to rise. For a negative data, when they are not dropped it, they wanted to rise. Keep it in mind. Okay, I have taken it at 23, they have come to 21, 22. Doesn't matter. You can just fine tune and do it. And 1 or 2 pips is not a big deal. So I have taken 2 positions, one in Euro, another one in GBP, and CHF Brazilian move. So probably any dip, I'll try to buy it around 70, 72, but not more than that. Then in the case of Australian dollar, they have not come down below. So no more buying there. That's all. So if the opportunity is not there, I know very well next session they will give another opportunity for me to trade. So there is no hurry in entering into the other market. This is how we should be able to wisely handle the market. It's very important for us. Okay. Now, Mike. So you rely for your trading much more on the technical than the fundamental. See, mine is more on market trading, I don't use the conventional statistical tools because I have been using it for several years. I found that a lot of limitations I wanted to overcome with regard to all the type of analysis like the Fibonacci retracement, moving averages, weighted moving averages, exponential averages. Everywhere being a statistics professor, I just modulated and bring in variations to find whether it is able to really give the forecast. Finally, I found that everywhere you come across the limitations. So which has triggered me, similar to that of fundamentals, which has triggered me to go in for a unique type of analysis that is referred as the algorithmic analysis. Algorithm is sequence of statistical analysis. So that is what I am trying to use it and then fine tune, filter and try to give the forecast. That is why I am not giving the range probably in my forecast. You might be able to understand. See, normally in a technical analysis we end up in giving or could have a strong support around 1.3770 and it can go up to 1.3850 like that. So on the downside it can be 1.3660, on the upside it can be 1.3860. So that way, either way we will be normally tempted to give the levels. In case if it drops, that can be the support. In case if it rises, that can be the resistance. But in my forecast algorithm, I am able to say, okay, euro has to go up. So that gives a direction for us to trade. So then we have to use the market reading to fine tune our entry in the market. During a dip, a false move, because we know their intention, they always make a dip before making a rise, always make a rise before making a drop. So we try to do that. Trying to make use of the false move to enter into the market. That is how my analysis is. Then I use the strategy to limit the risk and maxi profit. I don't just like that give that loss. My money to that of the players. So once a position makes profit, keep stop at entry. Now my GBP position is gradually making profit. So once it makes about 20-25 pips, I will keep stop at entry. Then what about crude? Crude, they are just for the month and made the psychological level 100 and the futures 120 and things like that. And after making an upward stop, and you'll come across profit booking moves. Then are you using the average daily range as your target for the intraday positions? No, I always relate the market to that of not averaging, related to that of the low or the high. If the market is near the high and not breach the high for more than 30 minutes, I try to take a sell position. If the market is near the low, not breach the low for 30 minutes of observation, anytime I come in, I don't simply take a position. I just watch the market compulsorily for 30 minutes and watch what they are doing. Are they doing a USD weakening move? Are they doing USD strengthening move or a contrarian move? So if they are doing contrarian move, okay, what currency they are trying to handle? Euro CHF? Okay, they are gaining it. In Euro also they gain the positive net change, CHF also positive net change. Why not I take a buy position in Euro CHF? That is how I try to choose the currency wherein it has got the spread more than 50 pips in the low and the high. Then any possibility to go above 62, GBP is expected to go above 62.63 and my target is 65. Okay. Okay, see, it is not my territory, sir. How the countries handle their stronger currencies, probably we have to expect the respective financial advisors, how exactly they are handling it. So, I am not a competent person to answer all those things. Okay, fine. Let me go back to that of the PowerPoint presentation. And somebody asked for the timings. So market timing 0030 to 7:30 GMT, 7:30 to 8 is a gap time. Always gap times they make a false move. If it is an upward move, then understand during first 30 minutes of the session they will make a downward move. If it is a downward move during the gap time, the first 30 minutes they will make an upward move. That you can do a gap time trade also. 8 to 14 GMT will be the European session and the US session 14:30 to 21:30 followed by the gap time. So I'll come back by, so the positions, probably this is the forecast, volatile move, little bit of volatile move, they have done it in the case of GBP, but not in Euro much. Then afterwards they are expected to rise. See whether the forecast comes true. Then also we have to enter into that other market, some levels. So 1.3823 is a buy level with a 30 pip stop. In the case of Euro, 1.6095 is a re-entered level with 30 pip stop. Still, my buy order in the case of CHF is not being filled. It is still around 90 to 85. In case if it is filled, I will convert into position and show you what happened during that of the US session. Then my buy order in the case of Australian dollar is also not filled. So I'll wait for those levels because not big moves are happening in the market. I think a lot of traders are waiting for the US GDP. So you might come across subdued moves during this particular time frame. So I'll come back by 15 GMT and give you the analysis of the market again and see how exactly we can take trading decisions. So I'll meet you again by 15 GMT. Thank you for visiting for the webinars, and I'll give you the review again by 15 GMT. Looking forward to meet you all here again during that time. Thank you one and all.